Welcome to Fundamentals of Sustainable Wealth. Let's begin. First question people have is, who am I? So if you're new to my channel, you may have not seen any other videos. Well, I'm a full-time investor, and right here on the screen you can see that I invest in publicly traded financial instruments. These are stocks, bonds, exchange traded funds, mutual funds, closed-end funds, things like that, all available on public markets. I also invest in non-traded private placements, and those are Regulation D offerings, private storage unit investments, private multi-unit apartment investments, things like that. I also directly own hard assets, directly own rental property. I also invest in index universal life investments. I enjoy tax-free growth, free from stock market risk, so that's an important part of my portfolio. I'm also a private lender to certain businesses, as well as an entrepreneur, physically opening up businesses such as American Detail LLC, which was my first major company I started when I was 22 or 23. And Clark Commercial Capital was another one. There's a screenshot from my commercial for that. I've also been featured in certain newspapers and written articles myself about investing. And that one was about the marijuana industry, which was syndicated by MSN Money and received tens of thousands of views. So that was a really interesting one. And so that is my history in a nutshell. Very, very brief history. Of course, if you watch my videos, you'll probably learn a little bit more about me. Of course, you'll pick up little bits and pieces. So today's video is all about sustainable wealth, and really, what does that mean? So when people think about becoming wealthy, really it can be for several different surface reasons, but the main objective and the main reason that I feel relates to everyone is sustainable freedom, right? We all want the freedom to choose, the freedom to do whatever we want in life, and wealth can help us achieve that objective. And so if we approach becoming wealthy from that standpoint, sustainable freedom, I think we all can relate. It doesn't really matter our backgrounds and where we come from and what we like, because we all can relate to having sustainable freedom. So that's where I'd like to guide our conversation within this video. And as you can see here on the screen, it's also known as the fuck you position. And I'm about to show you a clip from a video called The Gambler. And for those of you that may be sensitive to stronger language, you might want to skip forward about a minute from now on this video. And this isn't meant to discount the professionalism of this video. It's just a really good raw interpretation of what the FU position means to some people. So after this video, again, it is from a movie. After this video, we'll go through the nuts and bolts of what it truly means. But again, those of you that are sensitive to strong language, I would probably just skip forward about 1 minute. So with that being said, let's get started.
You get up $2.5 million, any asshole in the world knows what to do. You get a house with a 25-year roof, an indestructible Jap economy shitbox. You put the rest into the system at 3 to 5% to pay your taxes, and that's your base, get me? That's your fortress of fucking solitude. That puts you for the rest of your life at a level of fuck you. Somebody wants you to do something? Fuck you. Boss pisses you off? Fuck you. Own your house, have a couple bucks in the bank, don't drink. That's all I have to say to anybody at any social level. Did your grandfather take risks?
Yes.
I guarantee he did it from a position of fuck you. A wise man's life is based around fuck you. The United States of America is based on fuck you.
Okay, so what he's basically saying is, you know, if you have a large sum of money, you definitely want to take care of your foundation first, right? He used very broad terminology. Get yourself a house. Make sure it's, you know, well built, nice long-term roof. Get yourself an economic vehicle. Put the rest into the system. And what he means by that is broad conservative investments to produce some passive income, to pay property taxes and your other financial obligations. And, you know, it's entertaining, it's raw, it's that Hollywood movie, but really the advice is really, really good. Now, to put it in a more professional way, you know, you really want control over your life, over your time, right? Time is the only thing that we can never have more of. And so you want to make sure that you design your life and you arrange your life in a way to where you control your time as much as possible. And so that's really the goal of becoming wealthy. And so obviously with, you know, putting yourself in the FU position, you have a lot less stress, right? You're not worried about, you know, your bills. You're not really worried about a lot of the daily things that we all stress about. you also have fewer problems. Think about it this way, and this is really applicable to a lot of people, and truly think about this deeply. Think about the last 10 times that someone came to you, or all different people came to you with a problem of theirs. I'm willing to bet with in a fairly certain manner that 8 out of 10 of those problems, if not 9 out of 10, could be solved with money, right? If you look past the surface and into all those problems, I bet you 80 to 90% of them could be solved with money, right? Now, there's always the thing, medical issues, things that it doesn't matter how much money you have, but most problems in life can be solved with money. And so when we talk about becoming wealthy, it's not really materialistic and making it rain and flashing wealth. It's about having the freedom, living a less stressful life, fewer problems. And so again, this is really the message I'm trying to push out into the universe, is wealth is really an overall concept of freedom and choice. And so not only do you have fewer problems, but you have much more opportunity, not only in life, right? You can do things with your friends, family, loved ones, but also in business. Now, how many times have you ran across something where you feel like you found a really good business opportunity and you said, man, if I only had $5,000 to inject into that and grow, or if I only had this to invest into that, right? So more opportunities come with having wealth. And so again, this mindset that I really would like you to get into is looking at money as a tool, right? It's almost like a multi-tool or a Swiss Army knife. It has this feature, it has that feature, it's very handy, but if you're not careful with it, it can cut you. And we'll get to that in the next slide, but money is simply a tool, and it all depends on how you use it for the results that you'll get. And so money is also fuel. Like I said, it's the lubricant to life, if you will. So if you have that type of mindset about money overall, I believe you'll be more successful. And so the first step to this entire way of life is building a solid financial foundation and stacking bricks, right? I want you to physically imagine stacking bricks around yourself, building a solid foundation of bedrock. This is, and I have it here in yellow, this is the most critical step. Now, other things and other slides are of course really important, but it's, nothing is more important than having a strong foundation. And let's just jump right into it. So here is an example, and this is an actual visual of a physical foundation and the underpinnings of a home with a beautiful home on top. And really what's interesting is this is how wealthy people do it. They have an emergency savings account, right? And so when you think about it, 40% of Americans couldn't cover a $400 expense. That's to me, I can't even comprehend that. That's crazy. Now, an emergency savings account is a high interest FDIC insured savings account that has a minimum of 6 months worth of your expenses in that. And again, it's away from your checking, it's away from your other savings. It's a specifically designated account where if you were to lose your job, become injured, if something were to break, you would be able to continue your lifestyle without any hiccups. And so if, for example, if your expenses each month are $1,000, you should have $6,000 inside this emergency fund. And so that's one thing that's definitely part of building your foundational wealth. And again, all it is it's there to help you maintain your lifestyle when the inevitable thing happens, right? If you were to lose your job, honestly, yeah, it's not good, but it's a lot less stressful knowing that you have 6 months worth of income because you've saved it up over time. Something breaks, you become ill, an emergency savings account will help you sleep much better at night. Another thing rich people do, and wealthy people and smart people, is they make sure they're insured correctly at auto insurance, home insurance, general liability insurance, health insurance, life insurance. How many times have you met someone, and this is really scary and it's unfortunate, and it may be partially, it's not their fault, but some of it may be, is they have terrible health insurance because they're trying to go cheap, or they feel like they can't afford better insurance. But the risk there is now they're taking the risk on themselves financially instead of transferring it over to an insurance company. A big one I see, and again, this may be a sensitive subject to some people, so if this pisses you off, I'm sorry, but one thing that I see a lot is most people are underinsured on their life, right? You have a husband and a wife with 3 kids, and the husband is underinsured. He passes away. He's the breadwinner, and you have a stay-at-home mother with 3 kids, so now there's no more income or very little because he wasn't properly insured. Or say the mother dies and now the husband has to pay for expensive childcare. So the whole thing is most people are underinsured with their life, so they leave their family in dire straits financially, and that's the last place you want to be when you're trying to mourn, you know, the loss of a loved one. And so a lot of times we see the GoFundMes, you know, it's very, very sad. And I'm not saying that a GoFundMe or fundraiser is bad. Definitely do that, but that shouldn't be a substitution for, you know, insurance. And again, this concept of insurance goes all around. You know, you want good vehicle insurance. If you go to save $15, well, you know, that could end up biting you in the rear in the long term. So insurance is definitely important. The whole idea of insurance is transferring that risk outside of your life onto the insurance company. Also, just like it said in the clip there, there's nothing wrong with, you know, really expensive cars. Porsches, really fun cars. Believe me, if you saw my Instagram, you would understand that. I'm with you on the fun cars, but it's important to always have a reliable economic vehicle as a backup or as your foundation. For me, it's funny, I have a Kia Optima as my reliable car. It's paid off. It's a gas sipper. It gets me from A to B. So if any of my other cars, if I ever have to sell them or they become extremely, you know, expensive to maintain, I always have that A to B vehicle that will get me to where I need to go. Another thing that rich people do is they use credit cards as a tool, right? To get cash back, to get points, to get free trips, right? They use it to build their credit and they use it as a tool. Whereas poor people use credit as a crutch, right? They say, well, if I buy this on my card, I'll be able to get myself to the next month or pay my bill later, or I'll have this even though I can't afford it. So that's a big differentiation between credit cards and you know, it's funny, and I'm sure you've heard this before too, is, oh, credit cards are bad. Well, that's just like saying, oh, McDonald's is bad. Well, yeah, sure, McDonald's is bad if you eat it every day and you don't exercise and, you know, you're overweight and you have high cholesterol, but you continue to go eat McDonald's day after day. Yeah, that's bad, but it's also a self-responsibility issue. Whereas if you were to eat McDonald's once in a while to save some time, it's really not that bad for you. Same with credit cards. If you use them responsibly, it's actually a positive thing. I'm going to Bangkok next month on free flight miles from my credit cards. And so that's another major difference in your foundation once you're able to use credit correctly. And finally, you should always have a diversified passive income portfolio or side hustle or something that takes very little effort but brings in income to also support your lifestyle. So once you have your foundation, then you can buy yourself a big beautiful home, the cars, the trips, the material items, whatever you want, because at that point, that's when they'll truly be fun. So that's how wealthy people do it. In contrast to that, what we see here on the upper right is, I say poor or soon to be poor, because there's always those people that are really hanging by a thread, and if anything happens in their life, if they were to lose their job, you would see their life fall to pieces because they're living beyond their means. And so high credit card balance, right? Letting the credit card companies get rich off of them. I'm a stockholder of MasterCard and I think they're great, but at the same time, I don't let them make interest from me. They're underinsured, right? They're probably underinsured with their life, so they leave their family in financial dire straits. They take loans from their retirement assets or don't manage their retirement assets correctly, right? Taking a loan from your 401k or cashing out a 401k when you change employers, that's terrible. Little to no emergency fund. Unfortunately, that one really makes me sad. And they always live above their means, right? Whenever they get a raise, they go out and sign up for a newer car, bigger liability, and on and on and on. They're always spending more than they bring in. So that's the stark difference. But again, on the surface level, that's why I put these up here, it looks like they're wealthy, right? Because they have the Lexus, but secretly, they're hanging by a thread just to be able to make that payment. And so, you know, everything, you know, they're going to Hawaii, uploading photos on Facebook of it, and everything seems like their life is so perfect, but the only reason it looks that way is because they've spent all their money doing that. They have no foundation, and it's not sustainable. And so, really, this is the most critical thing, and it's the most achievable thing to do, and that's why I put this down here. Building a solid foundation requires zero special skills. No special skills. It requires zero connections. It's not like you have to know someone to get a certain thing. You know, all it takes is self-responsibility and action. And self-responsibility is saying, okay, Maybe I shouldn't go buy that new Lexus when my 5-year-old Lexus is perfectly good. And action, no one is going to force you to take time to go and open up an emergency savings account. So self-responsibility and action are those two things that will help you build a solid foundation and keep a solid foundation. Okay, so let's say that you've built your foundation, right? You have no credit card debt, you have 6 months worth of emergency fund, you're properly insured, you have a nice economical vehicle, you have some passive income coming in. So now it's time, go buy yourself a nice watch. Maybe you do want to get a new Lexus. Maybe you do want to take a trip to Hawaii, or you want to do something fun with the family. So how do you go about buying these material items? Because again, like I said, if you were to look at my Instagram, you would say, Ken, what are you talking about? Saving money and X, Y, and Z, when look at all these things you're spending it on. Well, this is the slide that I'm going to address that. So lifestyle inflation itself isn't bad, right? Just like McDonald's is not bad, but the problem is unmanaged lifestyle inflation, right? And so let's walk through an example. So here's an example of bad lifestyle inflation. You want to buy a boat, okay? So that's not bad, but it's how you go about it. So again, this is after you've built your foundation, okay? So then you go out and buy a boat. You want to reward yourself because you feel like you're at that first level of wealth. So you put down a down payment and you have really good credit because again, you don't have credit card debt and you pay all your payments on time. So you go and get a loan and it's $400 a month. Okay, that's fine. You can pay it. You're making good money. You get it insured. Okay, so what's wrong with that, right? It seems decent. Well, here's the true way to do it, the wealthy person way to do it, the sustainable way to do it. You want to buy a boat. Okay, so let's talk about the same boat. Well, the payment we know is $400 a month. So what's the first thing we do? Right? If we have a new monthly payment, we take 400, multiply it by 6 months. So we need $2,400 to be deposited into our emergency fund. See, the key is inflating your emergency fund with your lifestyle, right? If you just have 6 months of your original emergency fund, and then you go out and continue to earn more and spend more and do more, you're leaving your emergency fund way back in the wind. So you need to increase. And so some people might say, geez, I don't have another $2,400. I just want to buy the boat. Well, if you don't have 6 months worth of the cost of the boat already saved away, that means that you truly can't afford it. And so you definitely want to do that. And then also you want to research the maintenance costs and set aside money periodically. So whether it's at the dealer or you go around and speak with boat mechanics, they say, what would be the typical annual maintenance cost? Say it's $1,200 annually for whatever reason, right? For easy math. So you want to set aside another $100 a month, right? So $1,200. That way, owning this is a fun thing. You don't have to worry about a big breakdown. You don't have to worry about a maintenance issue, a costly maintenance issue before you want to spend a 3-day weekend with your family on the boat. And then once you do all that and you have it, then you want to make sure you're properly insured. You don't want to try to skimp to save $9 a month, right? Because all of that is just, what you're doing is, it's $9 extra a month, but guess what? It's peace of mind. And so that's how you properly inflate your lifestyle in a sustainable manner. So if you were to lose your job, you have this big brand new boat, right? Well, shoot, you have 6 months or more. If you save more, you have 6 months to go and get another job before you have to sell things and downgrade your lifestyle. So that's proper lifestyle inflation. So now that we know about building an excellent foundation, and that we know that buying material items and doing things and spending money once you're in a good position, that's not bad as long as it's manageable. So how do we continue to manage it? How do we continue to manage our wealth? How do we continue to be successful long-term investors? So the number one thing is stay diversified. Now, this might get, a little bit, money is almost like a religion, and investing is even deeper into religion almost. And so some of this, you guys might rub you the wrong way or offend you, but we all know those specific investors where they only do real estate, or they only do day trading, or they only do a certain, Shopify or whatever it is, online marketing. Well, they're really good at that one thing, and that's great, and they should, put a lot of their effort and time towards that and do it, right? There's nothing wrong with that. But you'll always be better off if you have many different things going for you. As long as they're manageable, you'll be smarter. I think you'll be happier because it's more interesting to be in different things. And so again, there's no problem that, you know, you want to own a bunch of rentals, but maybe you also want to own some dividend stocks or some mutual funds, or maybe you want to have some, you know, some side hustle income over here from some online marketing and or email lists, things like that. You always want to stay diversified, because also something that in 2008, for example, if all your money was in real estate, you were screwed, right? So there's many different reasons to diversify. Those are just a few. Also, you want to avoid extreme ideologies, right? Fear-mongering, things that you hear from a specific expert, or things that you hear on the news. So like CNBC, for example, great resource for financial knowledge. At the same time, though, they can be very exuberant in some of the things they say, and that can scare newer investors. But you know the reason why they don't have Warren Buffett on there every day, one of the most successful investors of all time? You know why they don't have him on there? Is because he would say the same thing over time. I just buy and hold. I stay principled. I don't change my ways dramatically according to what is currently going on. Well, if they had Warren Buffett on day after day saying that, it would be very boring and everyone would quit watching. So if it bleeds, it leads. Financial news is just like any other news. They have to make it controversial, exciting, and scary, right? Because that's a company. So stay away from extreme ideologies and end of the world and catastrophic thinking and all that crazy stuff. And also stay away from extreme ideologies in investing. That kind of goes with staying diversified, right? There's no 100% right way to do any sort of investing. Be sure to never drink your own Kool-Aid. So that's extreme ideologies. Never stop learning. Find mentors, find books, find YouTube channels like this one, find peers in the same industry. Never stop learning. The people that stop learning truly will fail in the end. Control your emotions is a huge one. Do not act on emotions when it comes to money. Money does not care how you feel. I always think of Mr. Wonderful for some reason when I always think about that. Money doesn't care how you feel. And furthermore, if you disrespect money, it'll be out of your life, right? But the more you respect money, the more it will respect you, and you'll have more of it. Never spend the entire amount of your investments produce. So if you have a $100,000 stock portfolio, dividend stock portfolio, and it's producing about 6% per year, that's $6,000 per year. Now, if you're taking that $6,000 and spending it, and your lifestyle is used to that, well, what happens when we have a year like 2008, a market crash or recession, right? Well, not only is your value, the principal of your money going to reduce, but some of those dividend stocks may lower or quit paying altogether. So then you have to scramble and adjust your lifestyle. The best way to do it long term is, let's use the same example of $100,000, and let's say it produces 6%, so that's $6,000. Let's not worry about taxes right now. And so what you should do is you should start maybe by taking $4,000 and living off of it, reinvesting that $2,000, not only to keep up with inflation, but to build your portfolio bigger and bigger and bigger. And then, you know, after a few years, maybe your portfolio, instead of, you know, producing 6,000, it's producing 8,000. Okay. And so then that's when you bump up your income to 6, reinvest the 2, and then, you know, in a few years, the portfolio will be producing 10,000, right? And then you can bump it up to 7. And then when we have a major market crash, right, you're still making $7,000 because it was producing 10. Does that make sense? So you never want to take every, you know, it's like squeezing blood out of a turnip. You never want to take the entire amount out. And so that's a big thing. You always want to reinvest a little bit, not only for inflation, to keep that $6,000, you know, worth what it's worth. And also, once you do that, again, you'll decrease the negative impact of a financial downturn. And the final thing is, find a passion or passions and a purpose and add value to the world in your own specific way, whether that's joining groups, organizations, or becoming wealthy and creating a charity or donating to a charity. And so one of my passions is YouTube. I've been working on growing my channel and connecting with individual investors and anyone that's interested about personal finance. I'm also a veteran, so I'm passionate, you know, about wounded warriors and things like that. I'm also passionate about travel. Like I said, I'm going to Bangkok. So find passions and purpose, and you'll network with people and grow and learn and just be happier overall. So again, one of my passions is YouTube and adding value. And I think, you know, that's important to my overall happiness, is making sure I'm contributing and adding value. And so with that being said, I invite you to join my community. I think, you know, the more we can grow our community, the more we can network. I love comments in the comment section. It gets my wheels turning. I start to think about different things. But I do videos on personal finance, stock investing, entrepreneurship, portfolio strategy, and lifestyle design, which is one of those types of videos we're doing now. And so truly, I invite you to subscribe, like this video, share it with a friend. If you're going through personal finance things with a friend and you both are trying to increase your lifestyle and build a solid foundation, share this video. I also invite you to check out my other videos and let me know what you think in the description below. In the comment section below. In the description below, I have various links and things, books, and I also have the emergency fund savings account that I use. I have ways to build your credit. Some of those links, full disclosure, I will receive a commission or a payment if you were to click and purchase anything. So that type of thing helps reward me for making these videos. And of course, that's all voluntary, but there's some links that are just good links that I don't make any money from. So with that being said, thank you guys so much for watching. I hope this is valuable to you, and we'll see you next time.